All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I want to go out and take a look at a company here with you, and this is a stock I followed for many years. Pretty familiar with what they do and how their financials move and how they operate. And this last quarter, I'd gone through the conference call and some of their numbers, and it's a company that I find to be really interesting, and more so now than what it has been. And I'm going to talk about this from a bullish standpoint, and we'll talk about some of the bearish risks associated with it. But this is a stock that's gone on to the challenge watch list. It's a stock that I personally have flagged for that kind of higher risk investment type category, where can allocate some, can't do too much just simply because of the high risk nature. But it's something where we could be talking about a stock that double, triples, or probably not quadruples, but doubles or triples, where we're not saying anything too unreasonable, here overall. But this is a company. They do a whole bunch of different stuff. They are involved, and in fact, according to their website, you can see everything that they are involved in, right? But the market views them as an oil company, and their kind of big driver is they work out on oil rigs, offshore oil rigs, and they have cameras and this equipment that allows for visual inspection of the drilling process underwater, and that's where they get a lot of their revenue, a lot of their business from. And so, very interesting company, they operate in all parts of the world, but they do have some smaller wind investments and some other things. If you're interested, you can just come in there. They're all on their site. But this is a stock that has had a lot of trouble. He has had a lot of trouble here of late, and rightfully so. This is not a stock that you look at and go, well, you know what, they don't deserve to be hit this hard. They absolutely deserve to be hit this hard. And, you can see back in August, September, this is about a $28 stock. They're about a $16 stock today, right? And if we kind of go back to a monthly, chart on them, you can see back here in 2013, they pushed up into the 70s and 80s, right? This is a stock that has traded up. And traded up in big ways in the past, right? This is not a company that has always been down here in terms of stock price. Now, I say they deserve to be down here, and I absolutely mean it. When you look at what's gone on with the company and what's gone on with offshore drilling, right? Offshore drilling has fallen off over many years, and their business, their revenues have really tapered off and have really fallen off here overall. Let's come in and take a look at some of their numbers. I'll just pull up a fundamental chart, and let's just start with the most important one: revenue over the last 10 years. Take a look at their revenue. It's down under $2 billion. This is the lowest it's been, since 2010, when the stock price was about the same, right? When their stock price had surged all the way up here into the 80s, their revenue was $3.6 billion. It was almost double what it is here today. So their revenue has fallen off substantially, and there's a big reason why the stock has sold off. But if we go and we look a little bit further, what's happening with this company, we could come into margins. This is their profit margin. This basically means that for every dollar they bring in, they're losing 11 cents. So it'd be cheaper for them to shut their doors than to operate. That's profit margin. That's after taxes and, all those expenses. If we just go to operating margin, which, takes some of that out, it can oftentimes be a better measure of margin, but you can see the operating margin, it's gone negative here as well. the margins back here when their revenues were really nice were up here in the 15 to 17% area. Even when the stock traded down to these price levels back in 2009, 2010, their margins were significantly greater. Their margins have gone negative. This is a big reason why the stock has really gotten punished, really been taken out over the last over the last several years, because it has been a constant here for them, and facing these headwinds of what's going on in this space and in this offshore drilling arena. There's not a lot to like there when it comes to those things. But if we start to look at some valuations, revenues haven't been great, profits haven't been great, margins not great. We know why they've sold off, but are we getting down to a value where, this actually starts to make sense to buy? Here's their price to book value. Their price to book value is almost 1. In fact, it dipped below 1, and the stock's been rallying since it went below 1. Which basically means that if the company were to close shop and sell all their assets and distribute those assets to the shareholders, shareholders would get basically, the dollar price of their stock reimbursed. If we go back a little bit longer and look at price to book value, you can see this is the cheapest price to book value that this company has ever had. This company has never traded below book value in its many, many years. It's traded down near here and traded down near here for a while, but we are talking about historic levels for this company. And so there's a silver lining in terms of valuation. There's a decent price to book value, price to sales. If we look at what the price of the stock is relative to their sales, you can see it is down here at 0.86. Now, what's interesting about this? Well, when we have seen the stock take major dips and have some pretty hard drops, and this is back here in its penny stock days, but we have seen this price to book value come into play several times, price to sales value come into play several times. And this has been where the stock has found some footing, and not necessarily where it's just gone straight up from here. It is kind of, spent some time. This is a long-term chart, but where the stock doesn't have a whole lot of downside left to it. And so we have this company that is in an industry that is on the decline, but an industry where the number of offshore rigs continues to increase. We saw that in the rig data here today. It increased by another 3, whose valuations are historically cheap, but whose margins, revenues look horrid. And so is there an opportunity, right? The sellers have had their reason to sell and they've sold. But going forward, what's up with this company? If we go through their earnings report, it was really interesting because they issued guidance. And, here on the site, if you ever want to kind of go through a report, you could just go to, they always have a corporate area down here below where they talk about, where they post these types of things. Let's see, where's it at on right here? Here they have the press releases, which it'll be in there for, for Oceaneering. But, they talked a lot about what's going on going forward, and they raised their guidance going forward. Now, they raised their guidance, and the guidance range is pretty large, but it's beyond what was done here over the last year. And to me, this is the key when it comes to Oceaneering. And I'm going to show this a little bit more better visually through Estimize. And you hear me, we talk about comparables a lot. It's not always where the company is and what they're doing. It's where are they going forward, and is it going to be? Are there easy benchmarks to hit? And if the benchmarks are easy, the stock's going to go up. Chipotle Mexican Grill, for example, IBM, for example, the benchmarks are easy. If the benchmarks are tough, Starbucks, over the last 2-3 years, Twilio, this last earnings report. If the benchmarks are tough, well, the stock's going to have a little bit more trouble going higher. Here's their beat on earnings. Okay, great, fine. There's some one-time things that create that, but positive earnings. But you can see if we go and look out to next quarter, where the earnings are expected to be, and you compare them to the same quarter prior, that's a significant improvement. If you look at the next quarter, compare it to the quarter prior, it's a significant improvement. The next quarter prior, significant improvement. Next quarter prior, boom. Significant improvement. And so one of the things that we are going to see with Oceaneering is this kind of easy comparables. And they have been in this state where the comparables have been tough, and they've been on this kind of contraction phase with the comparables. And they're now going to be moving into a positive phase with the comparables. So the numbers, when investors look at it year over year, they're going to look pretty darn good. Now, they're still in the negative, right? Here's the zero bar right up here. But one thing starts to happen to companies when they go from negative earnings to positive earnings, and we see it all the time. The company rallies ahead of earnings turning positive, but then once earnings turn positive, there's a whole nother wash of money that comes into a stock over time. There's a company whose guidance is such that they might be talking about some positive earnings as early as this year. I don't think it's any kind of guarantee, but they could be in that situation. Now, the company's argument for investing in Oceaneering is very interesting. And it's an argument that we didn't hear from a lot of energy companies this earnings season. But they talk about the fact that investment in energy has been down. And we know that the last several years, investment in energy has been very, very low in drilling, in production. We've seen that from Halliburton. We've seen that from Schlumberger. Some of these companies involved in the production. And new investment, and they argue that the lack of new investment is going to create a very strong supply-demand imbalance sooner than later, where the industry is not going to be able to keep up with the demand in production. Now, is that a 1990s, 2000 argument? Yeah, probably. Today the oil space is a little bit different. There's a little bit different technology, with the space where production can be ramped up a little bit faster, a whole lot cheaper, and it's not this 10-year production cycle that the energy industry, has experienced in the past. But they are spot on in terms of that lack of investment. And a lot of times when we see lack of investment in the energy space, we see a strong bullish run come into some of these companies afterwards. And that's their argument. That's what they say, hey, you know what, this is going to take us. We are going to start to see more contracts come in. We are going to see revenues really on the steep improvement here. Now, they aren't reliant on that. They do have some positive cash flow. So they're not talking about negative cash flows. They have a $500 million credit facility. So they have plenty of backup, right? This isn't a company that we're going to be talking about going under anytime soon or anything of that nature. But it is a company that, definitely there is some downside risk. Now, one thing that happened when the stock took its latest dip, when the stock dipped down here and became negative in terms of its price to book value, where it was below one, we saw the CEO or three major figures step in and buy shares here of Oceaneering. And so we saw some insider buying for the first time in a long time come into the stock. And the stock made a nice rebound with the rest of its sector. I'll show you exactly what those buys look like here. But we saw three people in the corporate structure end of December step in and buy shares here of the company, and they bought it at the kind of the $11, $12 area. Now, since then, the stock's now trading up at 16, right? Did they know something? Well, yeah, maybe, right? Was it just a vote of confidence in the stock? Yeah, well, maybe, right? But they've been willing to step in and buy a little bit, nothing too aggressive. But a lot of times when we start to see a cycle of buying, we will continue to see a cycle of buying really come into play. But when we look at this company, and we look at this stock and we look at what's happening out there and, the earnings that they reported this week. They reported earnings this week. This is fresh. It is still on its earnings reaction here. We're looking at a company whose expectations are, very, very low. Just absolutely in the toilet low. We're looking at a company whose valuations are historically cheap. We're looking at a company where if a couple small things go right, we're talking about a $30, $40, $50 stock if just a few things go right. Now, I would not buy this expecting that or playing that. This is something that I think if you're going to look to step in from an investor standpoint, you have to play the chart. Right, investors' standpoint, typically you say, forget about the chart. But from an investor standpoint, you have to pay attention to the chart. And this 14.5 area, I think, is a very important level. I don't think it's a level that if it breaks, it can't come back from. But if 14.5 breaks, I think we're going to be talking about the stock trading back to where those guys bought it, down in this 11 to 12 area. Right, so that risk grows substantially. But if this is a stock that, okay, we get another strong pullback in the energy sector, and this stock trades at 10 or 11 or 12, that to me is the spot where you go and you say, hey, I can start picking it up aggressively here without the chart. Right, now, I'm not saying it gets down here. In fact, chances are probably pretty slim that it gets down here. But this is one where we look into that sector, we look into what's going on. If you want a high upside potential and a company that could potentially even get bought out, and I don't think the buyout risk is, super high, but when you look at their market cap, you look at their balance sheet, there's a little bit of attractiveness in terms of a buyout from a big company like an Exxon or a Chevron. I don't think they would be doing that this year, though. No, I don't think that's in the cards for this year. But overall, a company that isn't going to need a whole lot to go right to see some major upside in the future. And it's a stock that come the next earnings reports is one where the reaction, the just general reaction to the company is more likely to be to the upside than to the downside because of the easy comparables. So that's Oceaneering. One to take a look at, one to kind of really take a closer look at as far as that group and that sector. It's not going to trade one for one with the energy sector. It's not gonna. It'll beat to its own drum a little bit, especially in terms of magnitude. But this is one where we are seeing some very strong volume flows come in over the last 2 months. We are seeing some very cheap fundamentals and some company raised expectations for what the numbers are going to be going forward. So that's Oceaneering here within the oil space. And I think you can actually make a similar argument for Halliburton, for Schlumberger. And the reality is these companies, Halliburton and Schlumberger, if Oceaneering goes up big, Hall and Schlumberger will go up as well. They're not as cheap, though, as Oceaneering is from a fundamental standpoint. But they all kind of have similar headwinds, and they're all kind of betting on about the same thing, and that is investment has been light, and investment's going to have to pick up to a big degree, in order to catch up with demand. And while we're not seeing huge signs of that yet, there are a few small signs that could, be starting to come into play as we progress here through 2019. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.